Welcome to your Mortgage Insider Update. It is Tuesday, October the 15th, and we are 3 weeks away from both the election, which happens on a Tuesday, and the Federal Reserve meeting, which is actually pushed back to Wednesday and Thursday, the week of the upcoming election. So pretty pivotal, not that the election is going to make any impact on what the Fed's going to do, but what's going to happen between now and then as far as economic reports. We're going to start at the end of this month with the personal consumption expenditure, so that comes out on the 31st, the week before the Fed meeting. And then they're going to start their meeting on Wednesday and Thursday. Both Wednesday, they get ADP, so that'll be the first Wednesday of November. That Wednesday, we'll get the ADP report, which is a non-governmental report on jobs created. And then Thursday, there's a lot of people that know the Federal Reserve actually gets data a little bit ahead of time. So before they finish their meeting on Thursday, they're probably going to take a sneak peek at the Friday Bureau of Labor Statistics jobs report. So that means that this coming up meeting, they're going to have 2 meetings worth of data to review. They have not met since the most recent jobs report, which was actually much higher than expected. We're going to take a look at the impact on that on interest rates here in a second. But now that they'll have that report and then the next report, whether it's another blockbuster report, there was about 240,000 jobs created in this most recent report from September. The report for October, coming out in early November, will be the second of pretty substantial amount of data that the Fed will use to curtail what they've previously stated, which is that the expectation is they're going to continue to lower rates on their federal funds rate at least another 0.5% by the end of this year. They still have 2 more meetings left to do that. If the data is really hot, they could back off on that and only do 0.25% maybe at the December meeting and skip November. So we will see. We're going to take a look at how that expectation has impacted interest rates. So as we look at interest rates, the 10-year Treasuries, where we're going to start down 7 basis points, still well above 4%. As we look back over the last 6 months, the trend has definitely been down. We have hit the bottom back in the middle of September, and just since these last job reports came out at the beginning of October, since we've seen this big run-up that brought us back to some of the averages that we had gotten far away from. Now, when you look at charts like this on a longer basis, which we can actually extend this out a little bit, you can see that the trend lines, there's a trend over the long term, and that's really the shift that's taken with the Federal Reserve, or the view of the Federal Reserve changing policy, and then their first actual policy change just taking place back here. So now we've seen a pretty steadily low rate of interest, in consideration to what we've seen in the past couple of years. But on the mortgage-backed security side, we'll take a look at that in a minute. That trend's very similar to what we're seeing on this 10-year Treasury, where we've gone up, bounced up in interest rates. Maybe it's bounced up a little too much. We'll see. Today, we're starting to break back below what would be the 100-day average, and it could bring us back down to a level in the 4% or a little below that, which could obviously impact interest rates in a positive way, another 0.25% or so, just this much down to get back to 3.88, 3.9% would be pretty substantial. When we look at mortgage-backed security charts, mortgage-backed securities trade, from the investor's point of view, the cost of the investment. So if the price is going up on the mortgage-backed security price to the investor that's buying the loan, that's going to net a lower interest rate available to the consumer. So looking at the same 6-month time frame, we've seen the opposite happen here. The prices in mortgage-backed securities has risen. There's been peaks and valleys throughout, but we had peaked back here in mid-September, and now we're hanging below, in this case, hanging above the 100-day moving average, with a lot of room to gain ground again. Really not much going to happen as far as big moves, I don't believe, until we see some of these new reports coming out. So as we see the report come up at the end of this month, and of course, there's lots of things that happen each week. Every Thursday we get how many new claims for unemployment, which last week was a surprise, much higher new claims. That could mean that people lost their job, say 6 weeks ago, and they're just coming into the unemployment rankings. So that could be a sign. We'll see if that's going to impact the jobs report that we have at the end of this month, but the more people that file for unemployment benefits. So this Thursday could be another pivotal piece of information that could kick us a little bit higher, or delay things to the end of the month for the ultimate jobs report. So as we are just 3 weeks from the election, make sure you get out and vote and enjoy the beautiful fall weather. Have a great day.